Hello, everyone. Thank you for joining us again. One of TVFCU's mortgage webinars. Got another great show today. And joining me again is Tina Peters, mortgage originator with Tennessee Valley Federal Credit Union. Hey, Tina, how's it going?
Good. How are you?
Doing great. We've got a special guest with us from Keller Williams today, Tina's friend, Saneca Gaines. Welcome her this morning. How are you doing, Saneca? Good to see you.
You frozen?
I think we're frozen. I think she got frozen. Okay. We'll try to get her going here in just a little while. First off, oh, we lost her there. Okay. Well, hopefully we can get her back here. We'll see what we can do. There she is. Hey, Saneca, how are you doing?
I'm so sorry. I don't know what happened. It just went out. Hey, I'm well. How are you guys?
Doing great, doing great. Thanks for joining us today. We've got some good information coming today. We're just going to talk again about, purchasing a home, the steps to buying a home, and everything. We brought Saneca on here with some of her expertise in the realtor business, and going to give us some information about what's going on locally and everything. But first off, just tell a little bit about myself, then I'll hand it over to Tina, and then Saneca will tell a little bit about yourself. My name is Bryan Fryar. I'm the mortgage sales manager here at Tennessee Valley Federal Credit Union in our mortgage department. I've been in the mortgage business since about 1997. Got about 25 years experience, origination, managing, etc. Bring a little bit of wealth and experience here, and want to hand over here to Tina. Tina, us a little bit about yourself.
Hey, I am a native Californian. I've been in Tennessee now for 7 years. I am going on 7 years also at the credit union. So total in the mortgage industry, about 13 plus. I've done origination, I've done assistant work, and I've also been a processor. So got a little bit of variety of background.
Oh, yeah. And Saneca, tell us a little about yourself.
Hi, my name is Saneca Gaines. I'm with Keller Williams Greater Downtown. I've been in the real estate industry since about 2007, multi-million-dollar producing team lead. So I have a background in development from commercial to residential.
Okay. Well, thanks for joining us this morning. So sounds like we all have, some experience here. I noticed you said 2007, so you've seen the ups and the highs and lows of the real estate industry, especially 2008. I think Tina and I have talked about that many times. So we have some interesting times as well right now going on. So we're going to talk a little bit about that. First thing, we're just going to talk about inventory. I know in my position, I do talk to a lot of my originators. I talk to a lot of realtors here in the local North or Southeast Tennessee, Northeast Georgia area about low inventory, not just our area, but all over the country. And I know we're seeing a little bit of easing here and there, but now, we got compounded with higher interest rates and everything. So it's definitely an interesting time. Still a good time to buy, a great time to sell. So Saneca, tell us what you're kind of seeing in this area as far as inventory and what's available.
What I'm seeing is in the last 3 months, I'm seeing the inventory is slowly starting to rise, maybe around 200 plus homes per month. So is that enough to cover the demand right now? Absolutely not. Yeah. But I think we're headed in the right direction. So inventory is still at an all-time low. If you're looking to buy right now, as you stated, Bryan, it is still a great time to purchase and sell. However, you just need to be patient. You need to connect with professionals that can get you to the closing table.
Yeah, absolutely. And that's something. All these episodes that I do, especially when we're talking about purchases, I always highly recommend working with a good local realtor. Saneca can help you with that if you're interested in purchasing. Do contact her. We'll have her information here at the end. But in this environment, you really want to do your homework. You want to be prepared. You want to talk to a good realtor, a local realtor who knows the area, knows what you're looking for, and you want to work with a good lender like Tina as far as if you need to do financing. I know we're seeing a lot of cash buyers in the local area in many parts of the United States, like Nashville, Atlanta. A lot of people cash buying because they're moving from other areas of the country. But also too, people are financing properties too. So got a little bit of both going on these days. Something I'm noticing, Saneca and Tina, I know you've noticed it too, is people sometimes, since inventory is so low, they're kind of a little more open to different types of property, whether it be a condominium, a townhouse, manufactured, is another one
Mhm.
that we're seeing. I'm seeing quite a bit of that sometimes. But we're also seeing, new construction too, coming on the market too, as something
Mhm.
that I had read about several months ago about all these builders were building homes, and they were expecting a lot of them to come on the market June, July, and August, and we're starting to see that now. Like you were saying,
Mhm.
Tanika, hitting the market. Um, as far as and I've read a lot about trends as far as home prices. I know they've gained a ton in the past year, a ton.
Mhm.
What are you seeing as far as home prices, and maybe in the future, what's everybody saying?
What I project is going to happen, I think with the rates rising, with them doing the Airbnb memorandums and things like that that are protecting the median income buyer, I think prices will slowly rise, but I don't think it's going to be anything like we've
Yeah.
been, exposed to in the last year and a half. So I think they'll start to slowly settle. And people have to understand also that interest rates really aren't high. We've just kind of been spoiled in those 2 and 3s. But pre-COVID, they were 4 and 5. So it's totally normal. So I don't want people to panic and think that, oh my gosh, we can't buy a house now. No, there's ways to do it. I believe that we need to definitely shift or pivot our thought process and what we do buy. As you were saying, people are considering other types of properties, and maybe your must-haves list may need to change considering, the market where it is right now. So
Yeah.
I
Yeah.
do foresee that, yeah, I think it'll level out here soon. I can't say that I don't have any data to support that it's going to just, you know, crash or anything like that. The gloom and doom that non-professionals are just spilling all over the internet. There's just no data to support that. So
Yeah.
still a good time to buy and invest.
I
That's
agree.
that's what I've been reading too, and I'm kind of seeing too. Demand is super high. We have we're the largest generation of Americans are now powerful home buyers, or they have the income to purchase home. The millennials right now, and then we have another generation coming up, the Gen Zers, which will have buying power too. So very
Mhm.
large generation there that has buying power, and you have baby boomers that are downsizing, or maybe going
Mhm.
into assisted living or something like that. So. Yeah, there's demand. From what I see, is still going to be high. I mean,
Mhm.
we may have some economic turmoil come in the future, maybe a recession. Hopefully, it won't be a severe one. But I'm like you.
Mhm.
I don't see anything as far as home values declining or crashing,
Mhm.
anything like that.
Mm.
I think we're going to have maybe a steady climb, but not like what we've seen the past year and a half.
Right.
Which
I
kind
agree.
of leads me. We were talking about people being open to different types of property. One thing
Mhm.
I'm seeing, I know Tina is too, in our business, we do land loans here at the credit union. We see a lot of people, if they can't find a home and they're maybe renting or they're staying in their home, they're opting to buy unimproved property, maybe to build on later. So that's
Yeah.
something we're seeing a lot of too. Plus, also, land is a finite commodity. They're not making
It
any more
is.
of it, so people are taking advantage of
Right.
it and trying to buy.
Absolutely.
Yeah, and
Smart.
Tina, we were talking about rates, going up, and they are a little bit higher than they have been. But Saneca was exactly right. Those of us been in the business for a long time. I know when I came in the business in 1997, man, if you could get an 8.5% fixed rate, you're doing great. That was fantastic. That
Mhm.
was a super low rate. So we have been kind of spoiled the past few years, especially the past
Mhm.
couple of years with super low rates. But that shift now is happening where rates are getting higher. So Tina, what are you seeing that you're offering or we're offering right now that's pretty common?
We are doing a lot of adjustable rates right now. The reason being is because they are still 30-year terms if you're buying a primary residence, and they have a much lower start rate. Both of our ARM products are in the 4%, mid 4% range for a start rate.
Mhm.
That's a lot better than 6.25% or so on a 30-year fixed. So we're going to get a lot more people qualified under the ARM product than the 30-year fixed. Now, historically, a lot of people initially think they want a 30-year fixed, or they come in asking for a 30-year fixed. But there is no point in locking in a 30-year fixed long-term rate if you don't plan on being in that house for 30 years. If it's your
Yeah.
forever home, then yes, you might want to opt for the 30-year, a little safe. You're not going to go anywhere. But people just starting out buying their first homes, the millennials, the Gen Zers, they're not going to be in that home for more than 7 to 10 years. So why lock in a 30-year rate at 6.25 when you can lock in an adjustable rate at 4 something? That's a couple $100 a month on, you're saving on your payment. So a lot of people are opting for that because of the payment, the monthly payment's a lot more attractive. And then the other thing I tell them to keep in mind too is, like, if we have an ARM product starting at 4.5, the cap on that is going to be 9.5. It's never going to go higher than 5% over. So the difference between like a 30-year fixed 6.25 and, the potential jump on that ARM 9.5, it's not that big of a difference right now. So it's worth taking the chance, especially if somebody doesn't plan on being in one place for 30 years, if they're starter home.
And I know you've been in this business long enough, and the ARM, when you hear ARM, it did get a lot of bad press, and rightfully so. Back in the 2000s, subprime lenders were doing ARM loans, and a lot of those were 1, 2, and 3 year ARMs, which meant they had no money down. There was a fixed rate for 2 or 3 years, and then after that rate just jumped through the roof, and people didn't have. They had no equity built in the home. They couldn't refinance it. They were stuck in it, and the rate went through the roof. So those ARMs back then, those were a whole different animal back then. Not a good deal at all. I would not have recommended those back in the day.
Not at all. There was the neg-am ARMs. There was the interest-only ARMs and stuff like that. A lot of people I'm finding when I'm talking to them have misconception about ARMs and how they work. They think that the period of time that your rate is locked in, so like on a 7/1 ARM, the rate is locked in for 7 years. A lot of people are under the impression that you cannot refinance in that 7 years, and that is not the case at all. Some people think that there's a balloon due at the end of the 7 years. That's, again, not the case at all. So a lot of my conversations with members nowadays are educating them on that ARM product and how it works, and getting them to realize it's not as scary as they initially think. Some people just hear adjustable rate and are automatically, nope, I don't want it. I don't want to hear about it. Don't want it. Okay, we have other options for you, but it's really not a bad product.
Yeah, it is. And that all leads back to talking to a mortgage professional or a realtor professional and knowing what your options are, keeping the lines of communication open too, and knowing what you qualify for, which is, and my next thing is getting pre-qualified in this market. Past couple of years, that's a must-have. You've got to be pre-qualified. You really need that piece of paper in hand to go to your realtor and say, hey, I am ready to start looking at homes and making offers. This is what my lender said that I'm qualified for. And the ARMs do give potential buyers, it gives them a lot more leverage sometimes on what they can afford. Because let's face it, homes are expensive now. They are very expensive. They're not like they were, 20 years ago. I was talking to someone yesterday, and we were talking about a property and the purchase price. And I was like, whoa, that's a really good purchase price. And it was a little further outside of Chattanooga, but looking at the property, we did look at the property, and it had a lot of issues. So now it kind of made sense why that house was being sold for $100,000. I was like, something's going on here, because it doesn't fit what homes are being sold for. So that's something to be wary of too. Homes that might have potential issues, major problems, and this property did have major problems too. It really honestly could have been financed with Fannie Mae, Freddie Mac, FHA, anything like that. The house needs a lot of work to it. So look, it's mainly made for a cash buyer. So and someone that's wanting a big fixer upper. So that's something to be wary of or cognizant of. But I do think keeping in contact, making sure you get good communication between you and your realtor and your lender to know what you can qualify for. And Saneca, whenever you talk to a potential client, I know each realtor, they kind of have an interview process. Kind of just tell me what you're looking for when you talk to a potential client and you advise them.
The sales process is I meet with the client in office, and we talk about many things. Budget, if they own now, it's an entire Gaines Group process that we go through. The most part is the first question I'm going to ask is, have you been pre-approved yet? What's your buying power? That's the major component that I can't really, do anything specific without that information. So.
Right.
That's and
Mhm.
that's what I do, like different webinars and seminars, some of them online and some of them live and in front of groups, we're CNE and places like that. But and that's one of the things I talk is, I say, find a good realtor, find a good lender. But before you even go to them, you need to sit down with your spouse, if you're married, if you're not, but sit down and do your budget. You need to
Mhm.
budget. You need to know what you can afford. And also, too, you need to know what your long-term plans are, short-term and long-term plans. Am I looking at starting a family? I want to
Mhm.
get into a good school district for my children.
Mhm.
Do I want to be closer to relatives? We have a lot of people. I have a relative who currently lives in Los Angeles and is wanting to move back to Chattanooga to be closer to family. So, that's things that people need to think about. Because they're going into the largest purchase of their lifetime.
Mhm.
So first-time home buyers need to be aware of this and have a plan too. And then,
Absolutely.
where you want to live, what type of property you're looking at too. Do
Mhm.
you want, I know some people like living like the south side of Chattanooga or the North Shore
Mhm.
downtown, or they like a more rural area, maybe out past Ottawa or
Mhm.
Appleton or something like that, or Saudi Daisy. To kind of, a plan and talk to a mortgage professional. I know, Tina, whenever you're talking to people about getting pre-qualified, what are some of the things you would advise someone, first-time home buyer? They're coming to you and let's say they've already made their budget and everything, and they say, Tina, we want to get pre-qualified. I'm
Mhm.
talking to Saneca, and we need to get pre-qualified because I want to go look at some homes this weekend. We've lined up, and I need to know what I can afford. What would you recommend?
Well, I have them do a pre-qualification application immediately online. And once I have that information from them, pull their credit, I can tell them if they are on target as far as what what they're wanting to buy, 350 purchase price. Hey, you actually qualify for quite a bit more than that. And a lot of people really have no idea what they qualify for. They don't even know what type of payment necessarily they're looking for. And that is something that's really, really important. You can't just go out and say, oh, I want to buy a house. You have to think about it. Even before you come to me to get a pre-qualification, you're better off going on Zillow and looking and saying, okay, this is the type of house I'm looking for. What is that price?
Mhm.
And come to me with that, at least a starting point. We have to have a starting point. Like, what are you looking for? Is that a good area?
Mhm.
Yeah, that's perfect. That's the kind of house you want. You can afford it. You're qualified for it. Go out and start your search. Or,
Mhm.
you know what? That's a little bit too much for you. And maybe they can't afford the house they want right now and they got to wait a
Mhm.
little while. But that's something that once I have that pre-qualification application, I can look at the big picture and say, you know what? Maybe you're not ready now, but if you take steps 1, 2, and 3, you'll be ready in 3 months or you'll be ready in 6 months.
Mhm.
A lot of people, I think I've talked to several people recently who are in a hurry to do something right now because they keep hearing that rates are going to go up and they're afraid that rates are going to go up. And, rates or no rates, up or down, if you're not ready, you're not ready. You don't want to
Mhm.
Yeah.
try to, pound that square peg into the round hole.
Mhm.
You're not doing anybody any good. You need to take the time and do it right, especially as you mentioned, Bryan, it's the biggest purchase anybody's ever going to have in their
Mhm.
life.
Mhm.
Yeah, very true. And like you said, people don't really know what they can afford until they start running
Mhm.
the numbers and calculating what that payment will be, principal and interest payment. But also, too, another thing a lot of people don't think of, and I know I've talked to many realtors, and they know this. Tina, and mortgage professionals in the mortgage lending industry, we know, but taxes and insurance, that's another thing that affects
Mhm.
payment too. And
Yep.
depending on your loan program, if you have PMI too, that can affect it as well. So
Mhm.
if you have someone that says, well, I can afford a $1,400 a month payment, got to think about that, those taxes and insurance too, being included
Mhm.
on that. And which leads me to another thing too. We've seen reassessments of property values and property taxes going
Mhm.
up and homeowners insurance going up. So a
Mhm.
lot to think about there. And again,
Absolutely.
you're talking to a realtor professional or a mortgage professional. They're gonna talk to you about that and let you know, this is something to think about too. Um, and we talk about 30-year rates and 30-year
Mhm.
loans about what people can afford. Something we see sometime too when people are downsizing they may want to put on a shorter term mortgage to pay it off earlier or something like that. I know I have some friends of mine that refinanced not too long ago, and they're empty nesters. Their children have gone off to college, graduated, and everything, and they downsized and they put it on a shorter term loan. So that's another thing people should be might could look at too, is your financing on shorter term too. And also, we've been talking about, Tina, you had mentioned, and Saneca, you said, getting pre-qualified. And there are the instances where someone can't get pre-qualified. They don't qualify right now. Either their job, the way it is right now, their income, they may have something on their credit they need to get cleaned up. I know that's something that we work at here, is if we can't do the loan, we kind of give them a map on where to get maybe 6 to 12, 18 months from now where you would qualify too. What are you guys seeing as far as you're talking about getting people pre-qualified and everything, is probably the I guess rate is a big issue right now, payment and everything. But finding the home, as far as like time wise, how long is it taking most of your clients? Saneca, if you could kind of delve into that a little bit, as I know marketing time is super short on homes once you list them, but as far as the average home buyer, how long is it taking them to find something?
I would say the longest it's taken one of my buyers would be around 3 to 4 months to find something. In this market, you have to be extremely patient, or buyer's fatigue can kick in. You can get frustrated, but that kind of coincides back to what I was saying earlier. Make sure that who you hire, vet your lender, vet your realtor, to make sure that they are, the professional that can get you to the closing table, through, the different types of programs that a lender can, offer. Of course, you have to qualify for those programs, but having different options can make an offer stronger. Knowing different things like that. So definitely vet your professionals to make sure that they are able to provide you with a level of, I guess, an upper hand in this market, because it matters.
Yeah,
right.
It does.
And to add on to that, one of the things that we offer at Tennessee Valley that could help your clients, Saneca, is sometimes people don't have enough money for closing costs and a down payment. In today's market, it's very competitive. Sellers are not accepting offers where they have to contribute to the buyer's closing costs. So what happens? Well, if somebody comes to me and they want to put 5% down, hey, guess what? Your credit score is 720 or higher. We actually don't need a down payment from you. So instead of making your pre-qualification contingent on the seller paying your closing costs, you don't need to put a down payment down, and you can pay your own closing costs, and that makes your offer stronger than the other guy who's asking for closing costs.
Absolutely.
So,
there's
that does frees up some money right there. So
absolutely. And in this market, you just have to, again, piggybacking off of what both of you have said, you have to be extremely prepared, do your due diligence, and save your money. If I have 5 things to tell you, all 5 of them are going to be to save your money.
Yeah.
It's funny you mentioned that. We had a cookout with a relative.
They want to buy now, but
yeah. I had a cookout recently when a relative asked me, and relative was a little bit older than me, and said, Bryan, why is it young people can't buy homes right now? I'm like, well, either down payments or closing costs, they're more expensive than they were 20, 30, 40 years ago, and saving that money. I mean, and they're like, well, aren't there first time home buyer programs out there? I said, yes, they are, but still, all the costs, everything has gone up. Closing costs are more expensive. You have title companies, appraisers, et cetera. Their costs have gone up too. So it's not as easy as it seems. And sometimes, we always fondly look at the good old days, as oh, it was a great time. Well, it wasn't easy back then either. And it's been made a little more difficult. Things are more expensive. And it's a little bit harder for borrowers to save money too. But it's like you said, plan. You need to plan, get the information, be prepared. Because once you start those wheels rolling and you start making offers, if you sign an offer, that's a legal binding contract there. So in our business, we always tell borrowers, be honest and upfront on your application. Let's not try to add any fluff or anything, because we will have to verify this information. And we work for you. You're our client. We want to make sure we can get you to the closing table. Just the same as Saneca tells her clients, be honest with me, tell me what your plans are, what you want to do, because we're all on the same team. We are trying to get you to that finish line of home ownership.
Absolutely.
Saneca, there's one thing that it's in the news a lot right now. I hear a lot about it, and it is homes being bought by companies. A lot of single family homes being bought up and impacting what homes are available. Now, I know in the bigger cities like Atlanta, Nashville, Los Angeles, places like that, they're seeing a whole lot of it. But are we seeing that here in Chattanooga too? Have you seen
Oh,
any of that?
absolutely.
Yeah.
Oh, absolutely. A lot of multi-offer situations, companies will come in and just pay cash for it. So like families that are actually looking for, a primary residence, they're going to reside there, are just, there's no competition when you have a cash offer. And then you have, one that has to, go through 30 days of financing. So we've seen a lot of that here in Chattanooga. So hopefully, I don't know if they're planning on doing anything or not, but if it's not their principal residence, it needs to be some sort of, parameters on that, because a lot of the median income buyers are they're priced out, and then their multi-offer situations, they're not winning. So again, it's happening. It's difficult. It's very competitive out here right now.
Yeah, and I've heard of possible legislation. I don't know about on the federal level, maybe on the state level, about limiting that, because it is having such a huge impact on home ownership. A lot of people, individuals are doing it, but companies are doing it, buying up homes to rent out. And I've even heard of some companies buying up whole blocks of homes and cash, just paying cash, and that is having a major effect too there. And but maybe that'll be addressed by the powers that be, hopefully, because home ownership is the American dream. That's the bridge to wealth. So
Absolutely.
hopefully
Let's hope.
Let's hope. Let's hope.
Let's
We'll see how it goes. So in talking about home ownership and buying homes and everything. And does anybody have any like a good story you can tell about something that you did recently for a buyer? I know I've got my own, but if you have one, if you want to share it with me.
Trying to think off the top of my head right now.
Me neither.
Currently working. One thing that's tricky for me is when somebody is moving here from out of state. Now, depending on their employment, they may need to establish employment here before I can get them pre-qualified. This gentleman I'm working with right now, he's from Florida. He happens to work for a vet in Florida, and he's relocating here. Well, when he initially contacted me, he had not established new employment here. Well, I cannot get him pre-qualified on income from Florida if he's moving here and purchasing a primary residence. So he actually did go out. He found a job out in Ray County. He got his offer letter with the start date, how much he's going to be making, and I was able to pre-qualify him on that information. He actually started after he had gotten in contract, but still in enough time to allow us to get those pay stubs we need to get into the file. Now, if somebody's working remotely and they live in, Michigan, and they're moving down here and they can work wherever, it doesn't matter, that's not a problem. And we're seeing a lot of that nowadays because a lot of people are working remotely. But there are still those buyers that have to reestablish employment. Another, on that same vein, there's some self-employed people that are self-employed that they not only do they have to reestablish employment here, but they have to have a history of that employment here. So if you're doing, let's say you're a painter and you work in New York and you painted in New York, well, you have to come down here and reestablish that self-employment business for, I'm going to say, at least a year. Some blenders out there I know would make you do it for 2 years, but at least a year compared to what your employment, what you earned while you were in New York. we need to see what you're going to earn when you're here. And if you have that same, same income earning potential now that you've changed states. So it definitely gets tricky. People coming in from out of state. It can be done. The other goes along with that is stay-at-home moms or somebody re-entering the workforce. You're going to need at least a 6-month history of your employment before we can use that income. So there's little, technicalities that the average person doesn't know. That's why it's very important, to contact your lender. As a lender, I have several, obviously, realtor contacts. Once you talk to me, and I can get you pre-qualified, I have a bunch of realtors I can advise, refer you to. Give this person a call, talk to everybody, get you that realtor relationship established, and then you're ahead of the game when you have 2 local, professionals assisting you in making that move and making that purchase.
Absolutely.
Yep. Saneca, do you have any stories that are recent or something that you kind of noticed that was out of the box?
Not recently. I've been training my new team members. I have 4. So been a little busy.
Okay. As a manager, I completely understand that. Hands are full. I've got one that actually came across my desk the other day, but I remember this member from almost a year ago. They had gotten pre-qualified, and I personally know this person, gotten pre-qualified with one of my originators, and they looked and looked and looked and looked and looked and just couldn't find what they wanted. And everything they made an offer on got out from under them. They were just like, they were so just discouraged. But they found some vacant land, and it was in a perfect area. It was a really good price. So they were like, maybe we could build on it later. I'm like, well, that's a decision, you don't have to make right now. If you're comfortable with that purchase price and the payment, go ahead and buy the land. Again, worst thing can happen is you don't build on it, sell it, make money off of it. So they bought it. And they break ground in about, I think, 2 weeks, because they've been talking to a builder here recently. So they're going to build their dream home. So I'm really, really happy for them. They did get put on a waiting list for this builder because builders are very busy. But hey, they were patient. So they're really happy. I'm happy for them. So it may not always work at first, but just keep plugging away and make sure you're working with a good realtor, good mortgage lender, and it's going to happen for you. So again, all 3 of us, we've been in this business a while. We've seen the ups and downs, seen some really good times, seen some times have been more challenging. But I think the market, the housing market is in good shape. There's some issues, but I think they're going to get worked out. People will always be buying and selling homes. No matter what, people have to have a place to live. So I think we're going to go ahead and wrap it up today. Hey, really great conversation. Really appreciate it. We do have our drawings, so do check the comments for the $100 Visa gift card. We announce our winner there. And we're also going to put up our contact information here. So if you want to reach us here at TVFCU, the phone number 423-634-3667. And also got Tina's contact information here. Tina, if you want to go ahead and give out your information.
My direct line is area code 423-634-3508. And my email is tina.peters@tvfcu.com. And my webpage is www.tvfcu.com/Tina Peters.
Okay. And Saneca, we've got your contact information here too. So we're going to go ahead and put that up on the screen if you want to go over it.
Absolutely. My direct dial is 706-841-3258. My email is sgaines@kw.com. And the website is thegainesgroup.kw.com.
Okay, great. So yeah, definitely, if you're looking for a home, make sure you reach out to Saneca and her group. They definitely can help you. Or if you're looking for any type of property, I forgot to ask you, Saneca, do you guys do commercial as well, or just residential?
Commercial,
okay,
residential,
great.
and development. Absolutely.
Awesome. So we're going to give a TVFCU a plug here too. Not only do we do residential, we also do commercial. That's a different department. So if you're interested in a commercial loan, do get a hold of us. We'll see what we can do for you. Tina can point you in the right direction. and get you over to our business services department and help you out on that. So again, thank you all for being here today. We really appreciate it. Hopefully gave everybody some good information to work off of. And again, if you're looking for a home, looking to buy, make sure you reach out to a professional realtor, Saneca Gaines and her group. If you need a good lender, talk to Tina. She'll take really good care of you. Again, thanks for joining us. Thanks for joining us, ladies.
Thanks, guys.
Everybody have a great day.
Thank you.
You too. Bye-bye.
Bye.